Hey traders, welcome back to our channel. Today we've gathered some of the most common questions you've asked about Forex trading as a whole, and I'm going to be providing you with answers that can help you navigate the exciting world of foreign exchange. If you're new here, don't forget to subscribe and hit the bell icon for more insightful content. That's on my YouTube channel. Make sure you're subscribed to my YouTube channel. Right. So in this video, we'll be talking about some of the most common asked questions. And of course, if you are joining us now, you can ask your questions wherever your curiosity level is. You can ask your questions using the chat button there. Just type in your questions, I'll go through them. This is a question and answer session. Okay. But before today, some people already sent me some questions through anonymous messages. So I'll be going through that first while I wait for the people here in the session to ask their questions. Well, from the first guy, he said that he has been following me. I've been following you for a while, and it has truly been insightful, trading wise. I got a job with Top FX broker, and I would love you and yourself to trade using a broker. Okay, so if you want to, or if you've heard about that particular broker, probably I've not heard about it before. If you've heard about it, then make sure you contact me on Telegram so I can share the link to Telegram for those who be interested in trading with the broker. Okay, so we have another message from another person. I'm one of your recent mentorship students. For the 9:30 a.m. setup, when price take out the recent day low and leaving previous day low or high before making a move, is that valid? Or price must take out a previous day high or low before it becomes a valid setup? Well, that's a very interesting question. And of course, I'm going to use the chart here to explain that particular question, right? So it's saying, is it okay if price takes out a current day low, or is it must price just take out a previous day low or high before manipulating or distributing to the opposite side? Well, let's look at an example here. Okay, so I'm going to add, I like using this indicator. Sorry. I like using this indicator, market session, FX market session. So this indicator tells me exactly when New York is starting and when New York closes. So you can see from the shaded area here, that's the beginning of New York session and the closing of New York session. So if you look at this particular day, this was December 27th. We have the beginning of the day here, right? And you can see the previous day had no um, draw liquidity. The previous day had no low. What we do here is we have the low of the current day. So in his question, he's saying that if the previous day has no low or high, is it okay to use the current day low or high as the drawn liquidity for the manipulation phase? Well, the correct answer to that question is yes, it is very, very okay. Like you can see this day, this is a perfect example. Price did not take out a previous day low, just like this day did, or this day did, or the days before that. Price took out what? A current day low. And you can also see this too. On the next day, price also took out a current day low. This is the slight manipulation before price starts distributing to the opposite direction. Although this is not very obvious, but the one that happens frequently are the ones where price takes out a previous day high or a previous day low before distributing to the opposite side. So yes, after the 9:30 equities open, price is most likely going to take any nearest liquidity before going to the opposite side. And if you're joining us here, remember to paste your questions on the chat option too. I'll answer them. So another person is saying, I'm battling with debt, yet I want to learn FX. Any advice? Well, so I'm not going to advise. I don't have any advice to give you here. Like I said, I'm only here to answer your questions. But if you're battling with debt, you should, by all means, try and make sure you pay your debt first before coming to trade Forex. because this thing is not guaranteed. Neither is crypto trading, stock trading, or any type of trading out there. Nothing is guaranteed. You obviously lose money. So it's not very advisable for you to be in debt and turn to Forex to give you money to trade because you want to flip. That's not advisable. Okay. So this person is asking, how do I break fear and greed? Well, I think what it means is how did I overcome fear and greed in my trading journey? Now, this one is a tough one because it's something that you never truly overcome. Even some of the professional traders out there are still struggling from fear and greed. It's common. It's just that at some point you be in control of your emotions. At some point you just go on tilt. So fear and greed is not something you totally overcome, but it's something you can, let's say, minimize. Okay, but the best way I'm going to say for you to minimize fear and greed is to get a second job, like a second source of income, because that way you won't be greedy in trading, and that way you won't fear to take trades, because no matter what you do, no matter your actions, you always have another source giving you money. I don't know if that's relatable, but that was what helped me. Right. So we have another question here from another person. What's your definition of consistency? I always backtest and front test. Some people keep saying one can be consistent doing rubbish. Please tell me what the things profitable traders do that I'm not doing. Well, of course, one can be consistently doing rubbish, like you can be consistently doing the wrong thing. Now, and it's very, very common, right? It's very common. But when it comes to consistency, like I keep telling some of my students, first you need to be disciplined, because that's where everything starts from discipline. You need to have patience, because without that patience, you cannot be consistent. And without consistency, you cannot get the experience. And now you see that everything about profitability in trading, or everything about becoming a successful trader, evolve around one thing, which is experience. It's very rare for you to see somebody start trading today and become profitable tomorrow. Why is that? That person has no experience in the market. But it's very common for you to see most of the profitable traders are people who have been trading for years, who have been in the industry for long. That's because of what experience. And trust me, they did not get that experience by being inconsistent. So focus on what is right. The market is always right, of course, but focus on doing the right things. You know what is right on the chart, and you know what is wrong. Follow your rules. If you break your rules, then you're doing the wrong thing. So you can be consistently breaking your rules, which means you are consistently doing the wrong thing. And by that way, there will be no result. You yield no result. So try as much as possible every day when you go to the chart and follow your rules and journal your trades. Those are the kind of things that yield profit or yield something at the end of the day for being consistent in a very long time. Okay. So another person is asking, what's my take on the silver bullet? Well, ICT silver bullet is a very good strategy, although I don't really use it. I don't use it at all. I have my own strategy, of course, still ICT, but my take on ICT silver bullet is that um, if you are learning ICT silver bullet, focus on that and perfect it. This is one thing about most traders, is that they jump from strategies and strategies. First you be trading how do I put it? London Q zone, fake move, or you trade New York Q zone, fake move. Before you know, you jump to new week opening gap, or you jump to new day opening gap. Before you know it, you jump to ICT silver bullet. So my own take on silver bullet is that if you want to trade silver bullet, focus on trading silver bullet. It is very, very important. If you want to trade silver bullet, focus on that. Trade silver bullet. At least give it time so that you can, become familiar with the strategy, how it works, and when it doesn't work. That's how I became profitable, by focusing on just one thing. Well, another person is asking, have you ever blown a Profem account? Yes, I've blown a Profem account. I've blown 3 Profem accounts to be exact. I blew 2 before I finally passed the challenge. But blowing a Profem account just, it's like, let me see, lessons along the way, like setbacks. Doesn't mean you are a bad trader. Of course, it's telling you that you're a bad trader, but it's just lessons. There are no mistakes in trading if you want to stay, if you are looking for staying in the long run. There are no mistakes. They are just lessons. So if you've blown a profit account, try as much as possible to learn from the mistakes you made that led to you blowing that profit account. That's why I keep telling most of you guys to always journal your trades. Like me, I can open my books now and or my spreadsheet, and I will see all the trades I've taken for this year. Everything is documented from January. All the trades I've taken for this year is documented. So I can go back and review everything and see how bad I was at the beginning of the year and how better I became after learning from my mistakes. So blowing a profit shouldn't be a something that troubles you too much. Just sit down, focus on the mistakes you've made, get another problem, and try not to make those mistakes again. Because making a mistake the first time is something you should learn from it, but making it twice or thrice is like you're telling yourself you don't really want to learn from that particular mistake. That's where you're doing the wrong thing. Okay, so we have another question here. A recap on insight on liquidities. YouTube topic, please. Okay, I think I'll make a video. I'll make an advanced video on that particular topic, insight on liquidities. I think that was about 6 months ago. I made a video. You can check on the YouTube channel where I talked about insight on liquidities. Like that topic is mainly on how to identify or how to tell if price is ready to do what, if price is ready to reject after taking a liquidity, or if price is ready to continue after taking a liquidity. That's what that topic is solely based on. Insight on liquidity. So I'm going to do I'm going to do a recap on that particular lecture if that's what the community wants. So you understand when to trade and when not to trade, when to know when price will reject. Like you can see, this is a high. You can see this is a high here, and to some people, after price have taken this high, they just want to sell immediately. To some people, they just want to continue. Like to some traders, it's a breakout and retest. To some traders, it's a reversal. So how do you know exactly when price is ready to reverse on this high, or when price is ready to break and retest on that high, or when to stay out totally from that high? You can go to that particular lecture, Insight on Liquidities, on YouTube, and learn for yourself. And also, I'll be making an advanced lecture on that particular topic. So we have one last question here. So this guy's asking, when price runs to a BSL, that's buy side liquidity, or sell side liquidity, using the technicals based on displacement and non-displacement, I get confused at times. This is almost the same thing like what I just talked now, like the insight on liquidities. When price runs to ICT teaches the OTE, you know how it looks like. When price takes a high out, you are expecting what? A displacement and a rebalance, price trading into a fair value gap there before actually coming down here. So this is what you're expecting, a displacement. If there is no displacement here after taking out that high, it's probably best to avoid those kind of trades. Now let me show you an example. Let me show you an example. Okay, so we have this low here that was rated at equities open. That's 9:30. We have that low that was rated, and now you can see what happened. Price took out that low and gave a displacement. This is the clear optimum trade entry. Price trade back into that fair value gap and bought. So this is exactly what ICT teaches. This is the displacement you are looking for. That displacement must carry a fair value gap. When price takes out a low, that's a sell side liquidity, or a high, that's a buy side liquidity. Expect price to trade back into the displacement, the fair value gap that was created in the displacement of leaving that liquidity. This is a perfect example of the question just asked. Okay, so I just got a question from the chat. Do you use any fundamental analysis in your trading aside economic news calendar? And can one trade high impact if the bias is clear? I don't really get that last part, but I don't really focus on fundamental analysis apart from economic calendar. What I do is I just want to check for high impact news, days. You know, there are high impact news days like the most effective high impact news are NFP, FOMC, and CPI. We all know that one. The rest are not that effective, like unemployed rate or PPI or all those ones. All those ones are not really that heavy as FOMC, NFP, and CPI. So what I do is that I stay off those days totally. I mean, I totally stay off those days, even if the news is 2 o'clock in the afternoon. That's New York time, 2 o'clock, or that's PM. You get. Even if the news is at PM New York time, I totally stay off those days. The thing is that most of these days happen to have three or more manipulation phases. What I'm trying to say is that price will accumulate. Remember the power of three. Manipulate to the upside, downside, upside again, downside again. Price mostly does this thing in those days, in those high impact news days. Go and study your charts. You see something like this always occur. Something like this always occur on the charts on those high impact news days. Go and study your charts. You see it. So this is exactly why I stay off the chart. So those are the main economic high impact news I avoid, right? So that's I think I would say that's the only fundamental analysis I do. Okay. Okay, we have another question here in your YouTube channel. What the topic of the liquidity you spoke about? I've spoken about liquidity a lot of times on my YouTube channel. I think you first check insight on liquidities. You first check lower time frame entries. Then you also check multiple time frame analysis, top-down analysis. All of those particular lectures are based on liquidities. I think liquidity is what's troubling most of the traders nowadays. Everybody just wants to trade liquidity. Everybody thinks that if you're not trading liquidity, you're not going to be profitable. Well, I hate to break it to you, but that's not totally true. Liquidity is one strategy on its own. There are people who are profitable who don't trade liquidity. So don't kill yourself on it. Okay. Okay, so I have another question here. Please, how do you deal with daily fair value gap entries? Okay, let's go to the daily time frame. It's very simple. I don't use daily fair value gap for entries. I hope you know that. And it's not something you're supposed to do. I use daily fair value gap for bias. It's very important. You don't want to be picking your entries on the daily time frame. No, you trust me, you definitely don't want to do that. You don't want to picking your entries on the daily time frame. Okay, let's go to the daily time frame on NAS 100. Okay, so let's see something like this. So we have a fair value gap here and outline it to the right hand side. You can see our price is perfectly respecting that fair value gap, right? Now let's find another one. So we have another fair value gap here. We have another fair value gap here. All of these things are for bias, not entries. Now, if you go down to the lower time frames, there's something like OTE or breaker block that you can use for entries there. So you are not necessarily using the daily time frame for entries. You are going down to that's where top-down analysis comes in because it's very important. You go down to the lower time frame and find a optimum trade entry there. That's particular entry pattern. Everybody have different entry patterns. So just find the one that resonates with you and focus on that. Like me, I use fair value gaps as my entries, but definitely not on the daily time frame. You get. So let's see on this first fair value gap. What is that OT I was talking about? You are waiting for a read of a high. So you see that short-term high there? This short-term high there was readed, and what happened? You can see that displacement there. Price displaced, leaving that high. And in this case, there's no fair value gap there, but we have what? We have a breaker block, which can also act or pose as our entry for the sell. So this is a 1 hour time frame. So if this is how you want to trade, it's very, very okay. But this is a swing trading pattern. Now you identify a daily fair value gap, which is this shaded area here, this white shaded area there. It's a daily fair value gap on the daily time frame. You come to the 1 hour time frame, expect price to or wait for price to read a high. After price reads a high, you wait for any displacement. Now, this displacement, you are looking for two things. You're looking for three things to be precise. a fair value gap, an inverse fair value gap, or a breaker block. Now, in this case, there's a breaker block. I think I thought about this lecture. I think go to the YouTube channel and search for swing trading strategy, something like that. You find this particular lecture, and that's your entry. A very good sell, nice sell from there. Now, if you come to this other one, we also have another daily fair value gap here, which we outlined on the daily time frame, of course. And if you come here on the 1 hour time frame, what are we looking for? The same thing. The same thing we just did. I'm looking for what? Price to read the high, right? So we have this short-term high there. Remember, I'm not marking anything like break of structure. There's no break of structure there. I'm just expecting price to take out a high when entering that fair value gap. Now you see this one. Once price enter that fair value gap, yes, it's ready to take out a high. Now price takes out a high entering that fair value gap. Now what are you waiting for here? You're waiting for a displacement to the downside. This is called what? The optimum trade entry. Now after that displacement to the downside, you have your what? You have your fair value gap, which is now your entry. So you see this fair value gap, that box there is your entry. This other red box there is your entry. And this is how you pick your trades with daily time frame. I mean daily fair value gap. You don't go to the daily time frame and start picking trades on any fair value gap you see. No, the pips alone, so it's going to be much. Okay, so I have another question. Does your strategy works also on synthetics index? I don't trade synthetics. I've not traded synthetics before, and I probably will not trade synthetics before. So I would say I don't know. It might work, it might not work, but I don't know. It's just for you to test them out. If you understand the strategy, you can go ahead and backtest them on the synthetics or whatever you want to trade it with. That's left for you to do, right? The thing I trade most is NAS 100 and US 30. And I've also heard some reviews from some of my students that treats currency pairs that says the strategy works very well on currency pairs too. Like the Monday setup, the Friday setup, all of those things work very well. Okay, so it's not. I don't know about the synthetics. You can go and find that for yourself. Okay, so we have another question here. Okay, you just joined, and if you may ask, what has been the discussion so far in summary? Well, like I said, it's mainly just question and answers, mainly just question and answers session. It's the last video for 223, although I expected a higher number, and I sent out a link in the community since yesterday for you guys to ask any questions based on your curiosity, what you like answers to, or what you want to hear my opinion on. And some people send the questions. Of course, we've discussed about that earlier on. And as I said, if this is your first time or if you're just joining newly and you want to ask questions, you can use the chat option. Ask any question you want to, and I'll attend to them now. Now, these particular questions we're talking about here may not be beginner friendly. Now, these questions are of advanced technical analysis that if you're watching this video, you might not understand. So if you want beginner friendly videos, you might as well start from the episode 1 of the videos in the YouTube channel, Trading Genius, of course. Okay, so I have another question. Is it possible I get access to the microphone so I can speak? Oh, no, that's not possible. If you have any question or you have any contribution you want to make, you can use it. You can use the chats forum to pass out whatever you want to say. So you also have another question. Do you trade other blocks? Of course I trade. Of course I trade other blocks. Go and check the last video on the channel, the other block secret video I posted on the channel. That's my secret, my other block secret. But I don't trade other blocks the way people trade it. It's very important to know that my other blocks, I don't use other blocks for supply and demand. I use other blocks for entries, and I use it to track other flows. But you might not understand anything I'm saying until you watch that video. Some of you use other blocks for, let's say, supply and demand or all of those things, but I use them to track other flow for entries. Okay, we have another question here. Please, how do you handle the inverse fair value gap or inversion fair value gap? it's quite simple if you ask me. It's quite simple if you ask me. Let's look for an example. Of course, it's going to be work going to search for an example on inverse Fairley gap, but it's very okay. Let me just use like a diagram or a sketch. Now, let's say this is price dropping to take out a low, right? But while price dropped, it left what Fairley gaps, and we also have price coming back to break that low with another displacement. Now, price does something like this and go back. So let's assume this is a price action. Now what happens here is price is dropping into an inverse fair value gap. There are some cases like this. There'll be a fair value gap left here. Now, why is price dropping into here? Why is price perfectly respecting that? If you check here, price did not respect that fair value gap at first here. You can see that price did not respect that fair value gap at first there. Now, what happens is that once price break through that fair value gap, when it's coming back, it's this time it will respect that fair value gap. That's why we call it the inverse fair value gap. I will not be able to find an example that easily now, but I wish I can find an example. I will show you exactly what I'm talking about. But that is just the sketch you need, nothing much. Inverse fair value gaps are very tricky, but very simple and straightforward. I can't find any example on inverse fair value gap. Of course, this happens intraday, but this is a perfect example. You have price dropping to take out a low. Let's say a low was rated here, and on that drop, price left fair value gap or series of fair value gap. Now, once price break through that's displacement again. It will also leave a value gap here, but what price will mostly respect or where price will likely snipe is on the inverse value gap. Better note that. Okay. I have a very long question here from somebody. I'm going to take my time and read it. We have less than 6 minutes now, so I'll be wrapping up. So based on we're using a lot of pigeon, but I'll just go through. So based on being a student, you don't actually have the whole time to check the market all day, like he's referring to himself for those of you that hear me read. And fortunately, your type of trading fits into your school schedule, which is day trading. Do you advise? Now it's like asking me the question. Do you advise to look out for pairs outside your watch list in as much as you are sure your strategy can trade any pair? Probably if you're unable to get entries on the pairs on your watch list for the whole week. Well, I understand what you mean. You said you're a student and the trading that fits your schedule is day trading or intraday trading, if I must say. So is it advisable to trade other pairs outside your watch list since your strategy works on all pairs if the pairs on your watch list is not displaying your strategy? If I'm right, that's the question you're asking, right? Well, my answer is you made that watch list for a reason, right? Now, if you check my own watch list here, look at my watch list. You can see there are only two pairs here, right? NAS 100 and US 30. That's the only thing on my watch list. Now, in a day where NAS 100 does not give me setup and US 30 does not give me setup, what do you think I do? I stay out that day. That's the discipline. I stay out for the whole of that day. I don't go out, okay, oh, fine, NAS 100 did not give me setup today. US 30 did not give me setup today. Let me go and trade Euro US. That's not discipline at all. So if the pairs within your watch list, as a student you are, the pairs within your watch list does not have any setup for that day, that means it's not a high probability day. You probably just need to take the day off or do something else since you're a student, right? It's not advisable to go look for another pairs. So we have another question. How do you sit with trading? Do you only trade when you know your time to trade has reached? The thing consumes time. I get this question a lot. Okay, so this is what I do. Okay, now look at this particular indicator. I taught this one on my private class, right? So you look at these indicators. These are New York sessions. Now, as an intraday trader, I don't need to sit all day. You know the word intraday trading, not day trading. I don't need to sit all day to trade. I just need to come at this time. So this is my window for trading. All these shaded areas are my window for trading, which is the New York session, AM and PM. But my window for looking for setup is the AM. I don't even understand what I'm trying to say. Once it's 12 o'clock New York session, I normally look for trades. So within the 8:30 to 12 o'clock, I'm looking for trades at that point. So that's the only time when I'm sitting on my system. After I pick a trade, I'm done. Like I'll close my system and set my stop loss, set my TP. Anyone that hits, I'll come back and record the trade on my trading journal. So you don't need to sit on your trades all day. I'll be taking one last question before we end for today. I'm excited you guys even turn up. So please, how do you detect a break inside of structure? What do you mean? How do you detect a break of structure inside a given BSL or SSL that is about to read? But this is one of the things that I think is making traders very delusional. You don't need to wait for a break of structure. The thing is very, very there. You don't necessarily need to wait for a break of structure. Now you see this particular trade, right? Look at this trade. Once price read that low or drop into that new week opening gap, price creates a favored gap. That is your trade. So some people, they'll say this is not what a break of structure because it's just breaking this high with wicks. Once price create that favored gap, that is my trade. I'm entering there. I'm not waiting for any break of structure. Don't limit yourself to all these necessities. Okay, one last question. Still on this question, you have a limited time to trade as a student, and also you trade prof. Do you advise increase of risk will help since you intend to take lesser trades? No, I don't increase my risk. I take all my trades at 0.75% risk. I don't know if that will help you, but 0.05% is too small for me. 1% is too big for me. So my trading or my trading pattern resonates with 0.75% risk. Okay. I don't rush trades, just go solo. Sometimes I can only pick 2 trades in a week. It doesn't happen. Like you get what I'm trying to say. Sometimes just 3 trades in a week, 2 trades in a week. Being a day trader or an intraday trader does not mean you definitely need to be trading every day. No, 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 no. That's not the word. Being a day trader does not mean you have to trade every day. Being a day trader means you have to come every day and look for opportunities. A swing trader means you come like a kind of seasonal trader. You only look for opportunities once in a time and you can hold one trade for months or weeks. But for day trading, you come every day and look for opportunities. If there's no opportunities, you leave. Don't go and look for that person or whatever to trade. If there's no opportunity, you leave for that day. If there's opportunity, you take the trade. That's how you become consistent with doing the right thing, and that's when we start to see profits. Well, we have less than 1 minute before the session ends, and I really thank you guys for showing up. If you are joining late or if you're not here from the beginning, I'll upload the video on YouTube so you can watch it later. Thank you guys for showing up. And please, if you've not subscribed to the channel yet, please do that. Subscribe and turn on the bell notification because we'll be dropping more videos like this coming to 24, complement of the season, and be safe.